A look now as we move into the stock market analysis. Always do read this slide. It does tell you about our approach to analysis and the important aspect of trade ownership. You have to own your own trades, no matter who gives you any kind of information. It's all about you managing your own risk. All right, stock market brief this week. Well, despite the fact that we have a pullback going on here on Friday, the stocks do remain very strong. And that's despite some worrisome inflation signals. The CPI, it was higher than expected. However, it was tamer than the worst fears. So the market didn't really react to that on Tuesday. On Thursday, there was a shocker on the PPI, up 0.9%, and that did trigger a brief sell-off. But the market did come back after that, and the buyers certainly are still in the market, even though they're, I think, approaching it in a different way. Rate cut is still expected for September, though the half-point move is likely off the table. The markets have removed that and looking like as of yesterday, it was a 93% probability of a quarter point cut and about a 7% probability of no cut. So that's what the markets believe. Huge government spending. I mean, if you didn't see the news, our government is adding $8 trillion to the deficit every 150 days. It's very tough to get big declines in interest rates when they have that much borrowing to do. So even though I think that you'll probably get one or two cuts this year still coming, without a deep recession or a very fast decline in the stock market, it's not historically true that they're going to be able to cut rates based on how markets act and based on how the huge borrowing needs for the government are going to be there. Basically, conservatives have left the room. There is no fiscal restraint at all, as the government is spending just as quickly as it ever did. Based on all of that, the dollar has softened and crypto has surged. That was led by Ethereum benefiting very much by the stablecoin bill. I think Bitcoin is in trouble. There's a lot of people that would argue with me on that. But certainly Bitcoin relative to Ethereum, we called this out a month ago, where we said we thought Ethereum was going to well overperform Bitcoin, and that did happen. I still think that's going to happen in a very significant way. And earlier in the show, we looked at MicroStrategy, MSTR, and that stock has been sliding and looks very negative. And I think that's a canary in the coal mine about Bitcoin. That people realize that if Bitcoin had a benefit regarding the potential for a utility of moving money around, well, that's now gone. I mean, it kicked that leg out because Ethereum and everything built on Ethereum is going to be much better for that. And everything around Bitcoin about that is much slower and more expensive. Investors, well, it's a rotation. AI stocks are stalling, and small caps and value names have gained traction. We've seen them start to move up. Interesting. I saw RV made a comment earlier in the week on jets, and I took a look at that. And that's the one thing, the airlines that are moving into that. There's about 5 or 6 airlines that are in the small cap category that are in the Russell. And so the Russell has benefited from that definitely. NASDAQ up fractionally for the week. S&P up about a percent. Dow up a little less than 2% right now. And the Russell up more than 3%. So you get a real good idea. And that's at noon today on August 15th. As far as the what's going on in the market. So buyers still very clearly in the market, and our momentum indicators have been calling that for weeks and weeks and weeks as they turned positive back in April and have remained positive since. That's a look at this week. Well, now we're going to look at the stock market. We'll look at the S&P 500, NASDAQ, and the Russell multiple time frame analysis. And we'll take a peek at the MCM, the market condition monitor, and see what that's telling us and which are the strongest and weakest stocks based on the built-in algorithms that we have on that. So let's take a look now as we switch over to the stock market. I want to start in the Russell for a couple of reasons. First of all, the Russell is the strongest, and the Russell is really dominating. The small cap, mid cap category is a cyclical pattern that is now dominating the action in the other indexes. So I'm going to show you how that works. This is the weekly chart in there, and you can see that there was a mid-cycle low due somewhere over here, and this is where it appeared right there, just a little bit to the right side of ideal. This one you could see came just a little to the left side of ideal, and this one over here just a little bit to the right side. One of this or this, not sure which it is. And the dominant cycles are pretty clear in there, as you could see right there. And that calls for some upside potential still in here, and then somewhere in here, a correction out into October, which is very much in alignment with what we're looking at in the other indexes. So if I compare over here, and you could see that the momentum in here had flattened out for just like a week, but then started to move up again. This is our reversal scout level 4 indicator. And this is the slim ribbon, and on the bottom you can see the slim ribbon PO, which went neutral after being positive for that whole period right in here. And all of those signals that we're saying upside momentum resumptions, those arrows that you see in there. And then it went neutral and actually has gone positive again. Option bias indicator was positive this whole time, and now it's gone neutral. So there's a little bit of deterioration that is coming in there, even though it is the market leader. If you look at this cycle right in here, this is a 16-bar cycle that has been pretty consistent in here, and that is dominating the other indexes, which has basically 18 to 20-bar cycles that keep reoccurring. This is the upward turn in momentum, and this is support into this area in August. This says to me that, you could see you had this gap down and it's getting a little sloppy in here. Maybe this pulls back for a week or so, choppy sideways, but if it gets into this area, 2260 down to about 2215, that would be a buy area for me. That would say, this is the place to start looking for the long side again. Right now, maybe a little bit of a correction based on the duration in here of the cycle. You can see right now, this is about 10 days off of this low. So somewhere in here about in the next 5, 6, 7 days, you'll probably make a trough in here and then begin to move up again. We don't really show any kind of a decline in here other than this declining part of the phase, because all of this is positive here. Everything that we look at in here in the Russell is positive. And as we talked about the rotation in stocks, I think that the rotation that we see is certainly showing up here in the Russell, as the Russell is strong. Breadth figures have gotten stronger, and the numbers as far as a breadth dominating in the Russell, I think, is important, because that gives you a good sense for the fact that there's a rotation, and declines probably won't be able to last very long. So that's the Russell. Now, remember this 16-day cycle in here, because it's going to show up as an out of phase on the S&P 500. And you can see that right in here. So I have this green dash, and that's that Russell in there. And we were looking for a minor trough to form in here a little bit later, based on what I saw in here on the S&P 500. But this is what happened, because, and that green dash shows you when the Russell took over, then it was dominating this cycle in here. So we keep the out of phase cycles in there so that we can see how they perform together. They don't always move together and in phase, especially when you're talking about small cap versus high cap. So we're noticing that the Russell is the dominant pattern in here right now, as you could see right in here as it moves up. And we're expecting at some point for this 18 to 20-day cycle, which has been around for years, to show up again. So we'll keep them both on here for right now. It doesn't matter, because the slim ribbon is bullish. The slim ribbon, the option bias indicator, is bullish. And you can see in here the slim ribbon PO, all bullish. Everything in here telling you, as it rides the support of the slim ribbon on the upside, that that is a bullish condition that we're in. And we're just illustrating the effects of the Russell and the 16 bar on the S&P 500. So that was the minor trough. The principle of synchronicity says that the minor trough will occur on the weekly chart at the same place that the minor trough occurs on the daily chart. Well, the only way that that happened was because it happened on the Russell. So essentially, discovering and seeing how the Russell was making sense here is how we knew that this was a minor trough that was important in there. And that was very much after the fact. I can't tell you that I did any brilliant analysis in there. I just had to wait for the markets to tell me what these conditions were. They certainly stayed positive. You can see in your S&P 500, this reversal scout is just so fabulous. Look where it turned positive right over here in April, and it's been positive ever since. This is the dominant influence that is influencing this daily chart right over here. That's what's so important about multiple time frame analysis, and we teach that in the cycle analysis workshop. Go to the top of our page under workshops and watch the free video, and you will learn a lot. So that's the S&P 500. The NASDAQ is very much the same as what we were looking in here. Sorry, and the X is the NASDAQ, and we'll take a look at the cyclical pattern here. Very much the same driving force there on the upside on the weekly, and the overlay of the Russell in here as it made that bottom there on that 16 bar cycle, and momentum just incredibly strong. So we'll look, this is that period where we talked about in the Russell for a little bit of a dip and then moving up again. That allows for this stock market to get a little bit of a dip and then likely moving up again. You can see we're projecting up here to what is this fib extension there. That's 24,300 approximately. This fib extension, 24,275. So that's where it kind of comes in right over there. As where you could get, a good upside movement in here. So if this corrected down in here into that 16-day low for the Russell and then started to move up again, then that would all be very much in sense with the rhythm that we see in here in the stock market. So NASDAQ and the S&P 500 influenced by the Russell, which makes sense because investors are moving out of the higher caps and into things that they see as value that have been possibly missed. You can see that if you look at, there's even some upticks going in the energies. We talked about the jets, the defense category. Those are moving up. So they're looking for value and looking into some of the lower caps. And that's what we see in here is that influence is going to probably keep the market moving up until it gets into a bigger corrective phase. What is the bigger corrective phase? When would that come in? Well, you see in here as I look at the period out into this October, November, this is where there's likely a bigger decline coming in the stock market. We're not even really positioning for that now unless you're a long-term investor because the risk rewards based on valuations are insane. So I certainly have moved my equity exposures way down. And you can see what happens as you get into a lot of these periods where they nest on the downside and you get these bigger declines that you can see here and here. This one only gave you a modest one there, but then of course you had this huge decline right over there, and you get this period over here where it's likely to get a sizable pullback. But there's no reason for us to even consider anything bearish. Now, everything I look at in here on the NASDAQ, on the S&P 500, and as I showed on the Russell, is all super positive. Let's take a look now as we look at the market condition monitor. This is our proprietary tool that you get with level 3 and 4 memberships. And let's just go here to the S&P 500, QQQ, IWM, Dow. You can see in here as we can dial in the different trader types. We're looking at short term right over here. And this is all bullish, as you can see right over there. If I go to intermediate term, which is for the longer holders, position traders, In this case, the IWM and the Dow are only slightly bullish, but they did improve 2 days ago from neutral to slightly bullish. So there's an improvement going on in there. QQQ turned very bullish on Q on 8. I'm surprised by that because we've started to see some floundering going on. So if I go down to the near term, which is looking over the next few days right there, here's where you can see these things starting to give up a little bit of ground in there, but the Dow is very bullish, as you can see. So you can get a good idea for intraday traders how you can use that as we see the Dow much stronger than the rest of the market today. Let's take a look here as we look at the trade setup conditions in here and just try to get an idea of top 10 in either direction. We have what's going on is gold and silver are consolidating, but investors are looking for value. Look at this. They're buying the junior miners there like crazy. So they're up to their highs right now while the metals are floundering. I'm chomping in the bit for a downtick in here in this group so I could add to positions in there. But they're buying the junior miners. Google is very bullish, as you can see. I don't get that one. Part of me says that their ability to monetize search is getting cannibalized, getting eaten up by AI, by other companies. And I think some point we're going to see that and hear about that in Google. But right now, my opinion doesn't matter because it's very bullish here on the short term. Here's Chevron, which is getting some upticks. Again, this is the market looking for value in there, kind of a cruise line joining the airlines moving up. Nucor, you can see that FXI. So China is very bullish in there, and that would you'd expect Baidu to be giving you the same kind of a reading. Ulta Beauty, Tractor Supply. I go shop in there for for bird seed now and then. And you can see Crane right there, all of those very bullish. So let's take a look at what are the very bearish in here. And you can see that you have iPaper, corn, of course, and wheat in terrible shape. Those of you that are grain traders, soybeans turned up in a positive phase today. While the overall pattern is not great, it's right on time. So soybeans had a nice upward turn in here. And you can see the other ones in there that are very bearish, not many, and then you go into the bearish ones right over there. So that's the great way that you can use the market condition monitor and give you a very good sense for that. Bullish conditions overall, the second and third tiers of the market driving the upside, investors looking for value. No reason, no matter what we look at as far as that period out into September, October, November, where the market could be weak, no reason to consider that yet because everything right now is still looking extremely positive. So that's a look at everything I want to show you. If you're just watching the YouTube clip right now and you didn't see the great presentation that Matt did on our day trader service, we're upgrading it now, Day Trader 3.0. It's mind boggling. You get our impulse monitor, keeps you on the right side of the big moves. Our day trader cockpit, which now includes the great trader radar on the futures, all the way down to 3 minutes for scalpers, and our replay system where you could play back the whole day and see how you could have set up your trades. Just fantastic. This is what so much of this looks like. And at $99 for 3 months, this is just an unbelievable deal. You're going to absolutely love that. Just go to the top of our front page, click on this special offer up there, save 25% on day trader, and you'll be able to get in more information and sign up for that. Of course, write to Matt at askSlim.com if you have any questions at all on the day trader. If you're new to us, learn from this group of pros and learn from our new Slim AI. Just click on that on the bottom right of our pages and you'll be able to talk to me essentially, or my virtual twin who speaks in my voice, and you can just type in there also and it'll blow you away when you consult or talk to Slim AI in beta right now.